Are you bullish on commodities? What will outperform the rest in 2022?
Extremely bullish on commodities and real assets, broadly. And I think it just you look at the setup we have going into this year. You've got equities, stretched valuations, the convexity at bonds, at a very, very high level. You have record dislocations in energy markets, metals markets, agriculture markets, and you still have a lot of money in the system. And then finally, you look at the investment positions in commodities, it's very low. What does that tell you? The best place to be right now, particularly given the Fed pivot, are commodities. So we think you're going to see another year of outperformance of commodities and real assets more broadly. And we go back to our core thesis that, we put out back, in October of 2020. This is the beginning of a commodity super cycle that's likely to go on for not only years, potentially a decade.
The beginning of a commodities supercycle. Jeff, we were just talking about the geopolitics. I want to thread that back in. What is a Russian invasion of Ukraine? What does that do to the commodities complex?
Oh, it heightens the geopolitical premium in prices. However, I think that event alone is not going to have a significant impact on oil supplies. Kazakhstan, I think, is a much more serious direct impact to commodity supplies. But I think it illustrates, the broader dynamic here. If you get sanctions imposed on Russia, that hurts their ability to bring in capital to invest in supplies on a 6-12-month horizon. And I think the key point with Russia is they can't even hit their OPEC plus quota right now because of a lack of investment. So if you throw that on top of it, it's just going to constrain supplies further. And I want to emphasize this. There are only 2 countries in the world right now who can produce more today than they could in January of 2020 before COVID struck. Who are those? Saudi Arabia, UAE. Every other country in the world struggles to hit that January 2020 level. In the U.S., 1.8 million barrels per day below that January 2020 level. Because remember, oil has decline rates. If you don't invest, the production begins to decline, and we're feeling that.
Jeff, I want to ask about uranium, and then we go back to oil. So we're seeing this crisis over in Kazakhstan. Is there going to be a potential crisis for the price of uranium? I know it's very difficult to get spot prices.
Uranium has a very bullish outlook on a medium and longer term basis. I think the realization is becoming around the world that you really want to solve climate change and decarbonize. You need to do this with nuclear power, and you need to do it with micro generators. So the outlook is extremely positive just from a fundamental perspective. And then you throw Kazakhstan issues on top of it, it just creates a much more bullish outlook for uranium. So actually, one thing I'd be watching right now is for one of these governments in Europe to classify nuclear power as being ESG friendly or green, and this really begins to take off. And I think we're getting really close to that happening.
Jeff, what does this bullish view translate? How does that translate into prices and your forecast for prices? What have you got on Brent, for example, currently at $80 a barrel by end of year?
Our target is $85 a barrel for first quarter, with very near-term prices hitting 90. But that was under the assumption that we get Iran back, later this year. And that's looking increasingly unlikely, adding to this geopolitical uncertainty. You push Iran back out into 2023, that 85 moves into 95 rather quickly. So this market has the potential to get very tight, going over the course of the next 3 to 6 months. And then you got to remember, there's no investors. Investors don't like commodities. They don't like this space right now. So if they get interested in this space in an environment in which you have relatively tight fundamentals, the upside, I think, over the next 3 to 6 weeks could be substantial, not only in Brent, but the entire commodity complex.
How substantial? So how high can actually, oil go this year? And does OPEC then come as a stabilizing force, or is it taken out of their hands?
Francine, I'm not going to give you that number. It got me in trouble a decade ago. In terms of thinking about the upside risk here, I'm just going to put, we're going into an environment which is really unprecedented. You look at the amount of liquidity in the system relative to where oil prices are, it's still at very, very low levels. That means the tolerance of the global economy to higher oil prices is much higher than at any other point in time that we have seen. You put that in the context with wage increases for lower income groups around the world, subsidies in Europe for low income groups, the upside here, could be substantial. And I think you go back to, OPEC plus ability to manage this. Again, it's Saudi, UAE. The rest of them don't have the supply available, which goes to that whole point. Access to capital in this market is severely constrained. Why? Nobody likes the space and they're not giving money to it. If they aren't giving money to it, they have no ability to invest. And I don't see that stopping any time in the near term, which that's what creates that real upside here.
Jeff, big questions about the trajectory of growth within China. What is the demand out of China looking like?
In energy, despite the fact that the Omicron has led to some significant lockdowns in particular cities, so far it has not had a significant impact in anything other than jet. So if you take the Black Friday in November of last year when we sold off over Omicron concerns, the impact of demand has not been as large as what people had feared. I think in turning to the metal side, the real focus is on Chinese property market. And when we look at the government, they're very front-footed on this. That they're likely to, ease. It's the triple R rate cut. We've had local government special bond issuance. They're asking the banks to extend credit for property. So I think we're past this. Here's another fact that's overlooked: 92% of the projects that Evergrande had stopped they're back in business again. Only 8% are still offline. And when we look at the demand for finishing projects, things like copper, alley, nickel, the demand's still going to remain high. So I'm not feared. And here's another thing to think about China. Last year the U.S. was loosening policy while the Chinese were tightening, so that the global was kind of balanced. What's going to happen this year?
Jeff.
You're going to likely have the U.S. tighten and China loosen. Mm-hmm.
Just a very quick question, because then we have to also pay for all of this airtime and go to break. But has the pandemic sped up our need for copper? And so at what point does copper become a more important commodity than oil?
When we look at let's call it 2022 is the transition between the recovery demand coming out of COVID and the green CapEx demand that we see in 2023. So you can think about it as passing the baton. The structural deficits across most of these metals markets, as well as energy, really start to bite in late 2022 and 2023. So that transition is underway, but we think it really gets underway in 2023.